Hello traders, welcome back to the channel. Welcome back to another video. Today we are going to be talking about US30. US30 it is another forex asset that you can, it's another trading asset that you can use to extract money out of the market. I told you this strategy works on all assets that have candlestick charts, be it indices, be it forex pairs, be it commodities, be it cryptocurrency, for as long as it has candlesticks and the charts, this strategy works on it. So stick around as we analyze US30 step by step using our structured trading plan called the Tricon strategy. And this is why I always tell you guys that this strategy is a solid strategy. You should learn this strategy. You don't have to throw away your strategy. Just learn this and add it to your trading arsenal, or your trading add it to your trading strategies. So today we're going to be breaking it down step by step, and don't forget to subscribe to the channel, guys, if you're not yet subscribed, and be part of this community of like-minded traders. Also, don't forget to like the video in case you find it valuable at the end. Now, the book is on. The book is currently on sale, and I've received very many overwhelming purchases. I am so thankful to the people who bought the book. I hope you're finding value out of it. If you still want it, it is still available for $10 this month, and then starting next month it is going to be $20 or $30 depending on what we could agree with my team. And also mentorship is on. $100 for this month. Next month it's going to be $150 fixed. So make sure you take advantage while things are still at a discounted price. So you can also click the link in my bio and inbox me on Telegram if you want the book. You inbox me on Telegram, and also join our free Telegram group where we always have to analyze the market every Saturday using our strategy for free, guys. The classes are for free. So tomorrow is Saturday and we're going to be analyzing the market for free. So let's continue. I want us to analyze this US30. So let's go for it. This is a US30 and this is the 3-hour time frame. The first thing you want to do to always get the direction of the market, whenever you go to an empty chart like this, an empty clean chart like this, the first thing you want to do is you want to go to your highest time frame. You want to go to your highest time frame. And what is your highest time frame in this case? For me, I use the weekly as my highest time frame, and I had put, okay, I've put my rules here, so I want you to see them as we go through the divide step by step. So the first thing you want to do is you want to go to your highest time frame. On your highest time frame, you want to observe the candlesticks, how they are looking like. You want to mark out your structures, and then you can determine where price might go next. So on the highest time frame, what do I see? I see that price is already bullish. After breaking out of this zone, we were making higher highs, higher lows, higher highs, higher lows, higher highs, higher low, higher high. We have made another higher high, and this is the weekly time frame. So we are likely to start buying than to start selling on our highest time frame. So how do we take advantage of this? We are going to step number 2. You want to mark out your structures and also observe the candlestick patterns on the highest time frame. So what I can see, the current candlestick is an indecision candle with a huge rejection to the upside, meaning that we might be going in for a small retracement, or we might be doing some kind of reversal. But the reversal is so unlikely. It is a retracement that is more likely because we are in an uptrend. So then we mark out your structures. How do I mark out structures here? Currently, I cannot see a lot of structures. However, if I want to do that, I always go to the line chart. And when I go to the line chart, this is what happens. First, I'm going to mark out the highest the market has reached. Then, I'm going to mark out the last stop the market made before it broke out, because that is where it is likely to go to. So I can see a lot of structures. I have others down here. Where is it? This one here. I have others down here, but now down here, before the market reaches down here, it will have to pass here first. That's why down here I don't need to mark anything. Now after doing that, the next thing I want to do is, let me just go back to my line chart, and I will find this on the daily. The next thing I want to do, yes, this one is marked well there. The next thing I want to do is I want to drop down after marking the structures and possible supply and demand zones on my highest time frame. And guys, I teach all of the things in my book, guys. I teach all of the things in my book. So get the book and you can be able to take advantage of everything that is there. I teach you on how to choose the right broker. I teach you on the correct account, which correct accounts should you use, account size, and how do you trade that account size. Not all accounts are traded the same way. I tell you the account that you need and how to trade it, guys. So after that, then then I'll tell you to drop down to your medium time frame. What is my medium time frame? My medium time frame is always going to be the daily, because I use the weekly or monthly as my highest time frame. So when I come to my medium time frame, this is now where I want to refine my zones. This is where I want to refine my zones. So I'm just going to go to the line chart and look at my zones very well. So I have a zone here. This is where price stopped at, and then I also have an indecision candle at that level, which is my demand zone. So I'm just going to mark it like that. So that is my zone. Then I have the highest point price reached with a lot of indecision candles. This one, and this one with a huge rejection from the upside, showing you that the sellers came in and rejected from the buyers. So we are likely to see a small retracement before maybe we can proceed to the upside, because the weekly is saying that we are in an uptrend. So that means if we see rejections from the daily time frame from the sellers, that meaning chances are high it is just a small retracement before we can continue to the upside, which is a very, very good sign. So what is going to happen is I'm just going to embrace this retracement before we can decide to continue to the upside. And those indecision candles, guys, I teach them in my book. I show you different kinds of indecision candles and rejection candles, bullish rejection candles, and then bearish rejection candles. They are all in the book. Indecision candles, the one that you need in the market. I told you there are many indecision candles and rejection candles. However, they are those ones that you typically need in the market. Those are the ones that I do show you, the ones that you need. The ones that you don't need, nothing concerns me for that. So now let us continue. So after seeing that, the next thing that I want to do is wait for confirmation. Where are our rules, guys? Okay, they are down here. The next thing you want to do is that we will have to wait for our confirmations on the daily time frame, and also the daily time frame. This is where we refine our zones. Okay, the medium time frame. And guys, don't okay, I know some people always say that I always trade on the high time frames. For them, they are not trading on the high time frames. Okay, the thing is, I teach many strategies in that book. Okay, there are not many, but there are two. One for the scalpers, one for the swing traders. So if you trade on lower time frames, I have a breakdown on which kind of trader you are. If you're a swing trader, I have a breakdown for the time frames you're supposed to use. Then if you're a day trader, I have a breakdown for the time frames you're supposed to use. If you're a scalper, I have also a breakdown for you. If you're position size trader, people who trades for 6 months, 1 year, I also have a breakdown for you. So it is on you. It is on you to define which kind of trader you are, and then you can be able to take advantage of whatever time frame that are in that book. So buy the book and then you can see whatever you want is going to be there. So let's proceed. Now on the daily time frame, that is when you want to get confirmations after refining your zones very well. You want to get confirmations of now starting to sell before you can buy. So if you're going to sell, you're just going to sell slightly into this zone here. Put your stop losses slightly above, sell to here 1:2 before now you can start buying to the upside. You should not be looking to sell beyond this, because price is in an uptrend and this is a support and resistance zone. So the only thing you want to do is sell up to here before you can proceed to the upside. I hope we are together up to that, guys. I hope, guys, we are together up to that, because people mistake the things, because sometimes you want to hold the market and hold it for long until when you're not supposed. So you can target like around 80 pips up to here, and then you should be out of that market. So now what is the next thing we want to do after refining our zones on the weekly and identifying where it might price might fall? What is the next thing you want to do? The next thing you want to do is you want to drop down to your lower time frames to now look for entries. My lower time frame start from the 6 hour all the way to the 1 hour, but then when I come to the 6 hour, this is what I see. Yes, there is a zone, there is a demand zone at this level, very clean demand zone. Price broke out, retested, and then went up. A clean demand zone that I would like. However, before we reach there, price is not even yet there. So what I want to do is I want to play price action forward and see what it gives me. And now guys, this is where patience comes in. As I'm playing price action forward, the equivalent for you is to wait. The equivalent for you is to try and wait and see if price is going to come to your zone. I hope guys you get that. So as I'm playing price forward for you, the equivalent is waiting to see if price can get into your zone. Okay, so now let me play price forward. So when I play, this is what I get. Price immediately tries to drop down but goes to the upside. So before I even say anything, okay, it is happening. Before I even say anything, I want to see something like a double top, a head and shoulder, or anything to help me sell up to here. Before I say anything like that, I want to be interested in this market. I'm looking for a double top, a head and shoulder, or a triple top to sell, to help me sell up to down here. So then I'm going to play price forward. Why is it? It is here. So the moment I see this double top and then I see this red candle, that is going to be my confirmation that indeed we might be ready to go down. So my entry should be here. My stop loss is slightly above, that is 50 pips, and then target at least 100 pips to the bottom. That is one. It should be 1:2, but this is 1:1.9, which is okay because this is just a retracement that we are selling. It is not that is the actual trade. So now after doing that, I'm going to wait for price action to reach my zone. The moment it reaches my zone, guys, I should be out of this market. I should be out of this market. Let me go to the 4 hour and see if I could see something similar. I think on the 4 hour it is there. That is exactly where I entered from. Price has made a lower low, so I think it should be okay even on the 4 hour. But let us use the 6 hour because it is more clear. So now I'm just going to play price forward. Price tries to retrace a little bit, goes to the upside, then boom, it drops. Now price almost hit our target, almost touched the demand zone, then started to retrace. So you should be careful here. Remember, you're selling a retracement. It is not the actual move. You're selling a retracement, so you should be careful here. The moment you see such kind of retracement, especially when it is about to touch your zone, you should be wary of it. And by now you should have taken at least some of your positions out. Now let's proceed. Price retraces to the upside, then price comes, boom. Now this is the exact time you should be taking your profit. I think it went even to 100, giving us a 1:2. Good, it gave us a 1:2. So when you have reached this retracement of 1:2, you should take all your profits from there. Take all your, let me even cut it from here. So your profit should be taken at, where is it, at this 1:2. This, where this week touches here, it should have taken out here for TP, and then you remove all your positions. Now when you remove all your positions, do you want to buy immediately? For me, I would not be buying immediately because price can just come and make a lower high and then proceeds to the downside. However, what I want to do is to see a structure that looks like I know. That is what I was looking here, double top or double bottom or head and shoulder. So now down here I'm looking for a double bottom or an inverted head and shoulder here, or a double or a triple bottom. So I'm just going to wait for price to show me that. So as I'm waiting, as I'm playing price forward, for you are waiting because you'll be in the live market. You're waiting for those things to happen, guys. I teach you all the things in my book. That's why that book is so precious. You should get it. Inbox me on Telegram. The link is in the bio or the description of this video. Inbox me and ask for the book on Telegram. I teach everything. I show you how the head and shoulders and inverted head and shoulders look like. The diagrams are there and the description is in the book. I show you how the double bottoms look and how you trade it. I told you I always trade them with the break of the neckline. I told you I show you how they look like and how you should trade them. So you should be able to get this book and take advantage of whatever is there, guys. I hope I'm making sense. So now what you're waiting here is something that looks like, that is an inverted head and shoulder or a double bottom. So we have one bottom and we have a left shoulder. So we are either waiting for a right shoulder or another bottom. So let's go. So price goes to the upside and retraces here. Now, if you mark very well, you can see that this is a left shoulder, this is a head, and something like a right shoulder is forming here. So what you want to see is a shoulder form. This is now a low. Okay, this is not a complete low because we don't have a green candle. If you see any green candle, that should be our confirmation because it would have completed that inverted head and shoulder. Good. Now, the next thing you see is an engulfing candle. It's so unfortunate that the candle is too big that we have to enter from up there because it is too big. However, we have nothing to do because now that is our confirmation. This is the right shoulder. Let me see the 4 hour if we had an early entry. I think on the 4 hour the early entry was here. It was around here. Yeah. So the stop loss is going to be there, and then you target up here. It should be at least 1:2. That is also 100 pips. Remember, you got 100 pips to the downside. Now you're getting 100 pips to the upside, and this trade is almost guaranteed 100% because from the high time frame you've been following price action strictly to see what it is trying to do. Now you have dropped down to the lower time frame and it is showing you positive signs of whatever your narrative was built on the high time frame. This should tell you that this is a high probability trade that you should be engaging in. And guys, you should join my mentorship because I have challenges there that I'm going to be introducing, growing $50 to $150 to then $500 to $1,000. The moment you reach $1,000, you should be out of our class and start trading on your own. So I'm going to be introducing those challenges soon. So you should make sure that you join our mentorship. Make sure that you join our mentorship. So I think I think now that should be okay. After getting that left shoulder, it should be okay. So right now we should be on our course to 100 pips. So when I just play price forward, it traces a little bit and boom, it even goes past our take profit. So that is it. You should avoid trying to follow the market so far. You can still hold market to go for, but me, I was out at that point and I was not looking to continue further. Maybe market went further, but I was not looking to continue further. I see even a demand zone here, market would trace from and continue. But for me, having gotten these pips here and also these ones here, I was not looking to go any further with this price action. So the thing is very simple. You just have to identify your rules and then stick by your rules and follow them. I told you, you have to get a rules-based strategy. Don't just get anything from anywhere and then you start use it for trading. Get a rules-based strategy and stick to those rules. Make sure you stick to those rules as long as they are clearly defined and they can lead you somewhere and you have back tested them. You know that in the long run you are going to be profitable if you're using it for as long as you apply proper risk management. I hope we are together up to that, guys. I hope we are together up to that. So now we are going to end this video here. However, you should know that if you're following your rules, you're always going to be profitable in this market. So what I'm going to do is that I'm just going to take a small recap on the rules. Where are our rules, guys? Who took? Okay, they are here. So we're just going to take a small recap on our rules and what we have learned, then I'll end the video from there. So the first thing you want to do, and you can take a screenshot of these rules. I'm just going to leave them on the screen such that you can take a screenshot of them and see that you can use it in your day-to-day trading. So the first thing you want to do is you want to go to your highest time frame. Now, after going to the highest time frame, you want to identify the structure of the market on the highest time frame. After identifying the structure of the market on the highest time frame, number 2, you want to mark out your structures and also look at the candles on the highest time frame and the direction on the highest time frame. Mark out your structures, number 2. Supply and demand zones, support and resistance zones, all mark them on your highest time frame. The next thing you want to do is you want to drop down to your medium time frames to get confirmations. You want to drop down to your medium time frames to get what? Confirmations. That is the next thing you want to do. The next thing you want to do is you want to drop down to your lower time frame now for entries. After getting your medium time frame confirmation, you want to drop down to your lower time frames for entries. You're looking out for entries. You're looking for head and shoulders, inverted head and shoulders. You're looking for demand and supply zones. You're also looking at support and resistance with double tops and double bottoms, but trade them with only the break of the neckline. I hope you're together up to that, guys. So I think that is all. Just go through this and backtest and see what you can get out of it. So it's been your boy Hassan, and make sure you join my mentorship. You're going to be having a challenge of growing small accounts to big accounts. When you reach $1,000, you get out of the mentorship, and then you start trading on your own soon. So make sure you take advantage of everything that I've told you, and also don't forget to subscribe to the channel because I always give out premium content. Also don't forget to like the video. Kindly inbox me if you want the book. Click the link in my description and then inbox me on Telegram. Ask for the book. I'll be giving you the book. I've sold the book. So far the feedback is good, so I'm just waiting for more people to come. I told you after next year I want to be teaching Forex again. I'll have become profitable enough to stop teaching. So that is all for today. Have a good day. Make sure that you do all the time, you put in all the time on the charts to achieve whatever you're supposed to achieve. Have a great day. Bye.